If Bitcoin wasn't volatile, it probably wouldn't be high performance. And then our value added wouldn't be that great, right? Like, for example, I say to people, if you knew Bitcoin was going to go up 2% a month forever with no volatility, an equity index allocator decides if the insurance companies don't want to buy Bitcoin and the banks don't want to buy Bitcoin or the index allocator.
Saylor then explains the business model of his company in simple but powerful terms. They acquire a high-energy, highly volatile asset, and then they strip the volatility and risk out of it to create financial products that appeal to people who want yield without exposure to wild price swings. In other words, they take Bitcoin, a raw, explosive form of digital energy, and convert it into something that conservative investors can safely hold. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
You know, as I say, volatility is vitality. Bitcoin is a volatile asset. If you're going to hold the asset, you need a 4-year time horizon as minimum. A 10-year time horizon is really the right time frame. If your time horizon is less than 4 years, you should hold the credit instruments like digital credit. And if you're an equity investor in a digital equity like my company, you need that same 4 to 10-year time horizon. 4 is the short term, 10 years is the long term. I'm an officer of a publicly traded company, and what are we doing? We are in the business of buying a high energy, highly volatile asset and stripping the risk and the volatility off of it in order to sell it to people that are much more risk adverse, that are much more volatility adverse, that just want that yield. And so if Bitcoin wasn't volatile, it probably wouldn't be high performance. And then our value added wouldn't be that great, right? Like, for example, I say to people, if you knew Bitcoin was going to go up 2% a month forever with no volatility, neither you nor I would be in business, because all the conventional finance investors, all the conventional journalists, they would dominate the market. Warren Buffett would own all of it, and there wouldn't be an opportunity for us. So I look at the volatility as it's a challenge, but it's also the bug is the feature. And I say to people, you know, volatility is Satoshi's gift to the faithful. He basically gave you the ability to rise to the top of your profession as an analyst, as a journalist, as a corporate operator, as an investor. And if the volatility goes away, no one cares about your opinion on any of this. It's like, you know, you've got fire, and we've got the phrase burned. Fire burns you and electricity shocks you. And Henry Ford created an automobile, you know, with a burning engine, with a fire in the engine. And we created electronic transmissions. And so you put electricity and fire in the car and you've got a killer consumer product. And I think the key here is you got to look at this market and say, this is indicative of energy. You can harness the energy. You can't be scared of the energy, right? There are those people that run from the fires, and then there's people that put the fire in the automobile or the jet airplane. And we kind of need the people to build the airplanes and build the automobiles if we're going to move the civilization forward. So the volatility comes with the territory.
Of course, you know, I know you've responded on X, but MicroStrategy shares are down almost 70%. That's a pretty big fire. I mean, what's your message to shareholders? Is it just hold on and things will get better?
My message is, if you have a 4-year time horizon or longer, if you have money you don't need for 4 years, and you don't want to take any counterparty risk to a currency, a country, a company, a culture, a competitor, then you buy Bitcoin. And if you're an equity investor, and if you want amplified exposure, if you want to invest in the future of digital capital and the future of digital credit, and you're enthusiastic about, like, we think we can sell a treasury credit product that's really compelling and very interesting to 1 billion people, right? 1 billion people would love to have a bank account that pays 10%. If you would like to invest in that future as an equity investor and you don't need the money for 4 years or longer, then you can hold the equity. If you need the capital in the next 4 years, then you probably want to be a more risk-averse investor. You need to look at a credit instrument. And if you need exactly down to the penny, $87.17 in 2 weeks, you probably want to put your money in a bank or a money market because that's just what you need. And so I think every investor has to decide what's their risk tolerance, what's their time frame, and are you a credit investor, are you a capital investor, or are you an equity investor? And then once you've made that decision, you can decide how to allocate your portfolio. The company, if you think about it, we have a dividend obligation, and the dividend obligation works out to about $2 million a day. $2 million a day works out to 5 basis points of our trading liquidity. So let's say if the stock is trading above 1 times MNAV, then you're talking about a 20th of 1%. It's like nothing. But let's go to the situation where the stock falls below 1 times MNAV, and we don't want to sell the equity. We can either sell the commodity, Bitcoin, or we can sell derivatives on the commodity, or we may even sell derivatives on the equity. But let's put that in perspective. Bitcoin's trading $100 billion a day. $2 million works out to, it's like 2/100ths. No, actually it works out to 1/5 of 1 basis point of all the trading of Bitcoin each day. It's like, it's not 1% of 1%. It's 1/5 of 1%. It's so small that it would pop up in the 5th significant digit, as a rounding error. So the company's dividend obligations are fairly de minimis. You can literally calculate them on our website. I think if Bitcoin goes up 140 basis points a year, we can pay the dividends forever and generate shareholder value, right? It's that small. And if Bitcoin goes up 0% a year, we have capital for the next 70 years. And in 70 years, we'll have to figure out to do something different. And we'll figure out what we're going to do to deal with it. But the company's financially very, very strong. And we have a huge number of financial options at our disposal because we are an operating company, and any of them could be used if we needed to.
The company pays about $2 million per day. But compared to Bitcoin's global daily trading volume of $100 billion, this obligation is almost statistically irrelevant. It is literally a rounding error. Even with 0 Bitcoin price appreciation, the company could meet these obligations for 70 years.
I think it's a bit alarmist. I'm not so sure the numbers are nearly that high. I think actually the numbers would be much smaller. I also think it's already priced into the market by a factor of 10 if you count it. I don't think there's any relationship between the decision making of MSCI and the NASDAQ 100 or the S&P 500 index allocators. The company is an operating company. It's just like insurance companies use capital in order to create financial products, and banks use capital to create financial products. We use capital to create digital credit finance products. It's possible there are people in the world that don't fully appreciate digital credit or digital treasuries. That wouldn't surprise me. We had that challenge with bankers that didn't want to bank Bitcoin. We had that challenge with accountants that were a little bit skeptical of digital assets accounting. The accountants embraced the asset, the bankers embraced the asset, the politicians embraced the asset. We had the challenge with credit rating agencies, and they just embraced the asset. We're starting to get credit ratings. We have the challenge under the Basel Accords, where Basel Accords allocate 0 value to Bitcoin, and now they've announced they're going to reconsider that. So I'm not concerned that we have these kind of concerns. I think we'll educate all of the companies in the space. Ultimately, it's above my pay grade to decide whether MSCI embraces digital asset holders or digital credit or not. It's just like it's above my pay grade whether the S&P 500 puts us in the index. But what I would say is, over the long run, it doesn't matter, because over the long run, this will create near-term volatility. But if the world wants a bank account that pays them 10% rock dividends, and if Bitcoin is digital capital superior to gold, then it's not going to matter what an equity index allocator decides. If the insurance companies don't want to buy Bitcoin and the banks don't want to buy Bitcoin, or the index allocator doesn't want to support a digital treasury company, the free market is going to allocate capital and it will adjust. It just creates a bigger opportunity for some other equity investor that will pile into this particular asset class and support these kind of companies. So it is what it is. It'll work itself out. I think whenever there's a lot of volatility in the market, and right now, clearly we've had a lot of volatility of late. We're living through about a 35% drawdown. You know, I remember what it was like when we had the crypto winter and there was a 75% drawdown. When you have a massive drawdown, everyone looks for a reason why, and they will grasp it. Is this the reason why? Everybody wants a reason for to explain their pain or the storm or the volatility. Is it the crypto exchange, liquidation bots, or is it this, or is it that? At the end of the day, if you look at the chart of Bitcoin for the past 15 years, there's 15 major drawdowns. It always comes back to an all-time high. There's 5 brutal pullbacks in the past 5 years. This is not the most brutal. All of those things have happened without the support of the politicians, without the support of the banking industry, without the ETFs, without the IBIT derivatives market, without the support of MSCI, without the support of the S&P index. I could go on and on and on. The reason that digital assets are spreading around the world is because there's a billion people. They want to hold the money in their hand. They want to move the money at the speed of light. They don't want to be dependent on 20th century financial structures. They don't trust gatekeepers. And they would like to move forward with their lives with some control, with financial freedom and sovereignty and property rights. And those fundamentals are stronger than ever. We just had the Secretary of the Treasury, Scott Bessent, show up at the launch of PubKey in Washington, D.C. last night, right? And so in the midst of all the, the crypto chaos, and people worrying about, well, will these guys say that, and will this happen? You have the most powerful financial regulator in the world implicitly showing his support for the crypto economy, for digital gold, for Bitcoin, and explicitly giving guidance to banks that it's okay to custody crypto assets. It's okay to actually handle them as part of staking and fee allocations, and it's okay to extend credit. And that is the most profound thing that's happened in 17 years in this industry. And if we keep our eyes on that, then the near-term volatility is just going to be noise. We have to work our way through it cheerfully, constructively. It'll eventually pass. People will look back and smile and say, you remember the day when that news story came out.
The broader volatility in Bitcoin and the crypto ecosystem. Bitcoin has experienced 15 major drawdowns in 15 years, and each time it has returned to new all-time highs. In the past 5 years alone, there have been 5 brutal pullbacks, some much worse than the current one. But those occurred without ETFs, without Wall Street infrastructure, without political support, without global custodians, and without the adoption we see today. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.